Have you ever wondered if housing development in Canada is really keeping up with our rapid population growth? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In recent news from CoStar, housing starts in Canada have increased by 4% in the first half of 2024. But this growth still fails to match the pace of our country's burgeoning population. While cities like Calgary, Edmonton, and Montreal have been leading the charge with increased construction activities, Toronto and Vancouver have seen declines in housing starts, with Toronto experiencing a significant 13% drop compared to the previous year. This decline is largely attributed to a 40% decrease in apartment starts. Despite these challenges, government incentive programs such as the Canada Mortgage and Housing Corporation's MLI Select program have played a crucial role in boosting new builds, especially in the rental apartment sector, with almost 50,000 apartments launched during this period. These apartments made up 72% of all new home builds in Canada's 6 largest cities. It is clear that while there has been progress, there is still much work to be done to address the housing crisis and meet the demands of our growing population. In Ontario, significant legislative measures have been introduced to encourage residential construction. The province passed Bill 23, which allows up to 3 units per lot without rezoning, a move aimed at increasing housing availability. However, despite these efforts, Toronto saw a decline in housing starts, highlighting the ongoing challenges in the region. While the situation may seem daunting, it is important to focus on the opportunities these challenges present. By continuing to push for innovative solutions and leveraging government programs, we can work towards a more sustainable and accessible housing market in Canada. Alberta, on the other hand, posted some impressive gains. Calgary's new home construction increased by 38%, with a notable 28% of rental apartment starts, resulting from office to residential conversions. Edmonton also saw a 67% increase in housing starts, predominantly driven by rental apartments. These developments highlight the potential for growth in other areas and the importance of adapting to changing market dynamics. Sandy MacKay. In a notable development, JLL has successfully arranged a substantial refinancing deal amounting to $125.5 million for a multifamily portfolio spanning multiple states. This portfolio's largest property is situated in Northeast Austin, Texas, which is experiencing a significant uptick in occupancy rates, reaching their highest levels in 2 years. The refinancing is a testament to the strength and resilience of the multifamily sector in Austin, even as the broader market navigates various economic challenges. Sandy MacKay. The multifamily market in Austin has been buoyed by increased demand, reflecting broader trends seen across North America. As cities continue to grow, the need for well-managed and well-located rental properties becomes ever more critical. This refinancing deal, facilitated by JLL, underscores the confidence investors have in the long-term viability of the multifamily market, especially in thriving urban centers like Austin. Sandy MacKay. While this news is focused on Austin, it offers insights for us here in Canada as well. The resilience of the multifamily sector in Austin can serve as a blueprint for Canadian cities looking to bolster their housing strategies. With occupancy rates on the rise and financial backing for large-scale projects, there is an opportunity for Canadian investors to learn and adopt similar strategies to address housing demands and expand their portfolios. Sandy MacKay. It is encouraging to see such significant investments being made in the multifamily real estate market, highlighting the continued appeal of this asset class. As we work to address our own housing challenges here in Canada, these developments in Austin provide a positive example of what can be achieved with strategic planning and robust financial backing. Sandy MacKay. In a significant development reported by Cody Baird from the Austin Business Journal, JLL has successfully arranged a $125.5 million refinancing deal for a multifamily portfolio spanning several states. The largest property in this portfolio is located in Northeast Austin, Texas, an area witnessing a remarkable rise in occupancy rates, reaching their highest levels in 2 years. This refinancing deal underscores the robust nature of the multifamily sector in Austin, even as the broader market faces various economic hurdles. MacKay. The multifamily market in Austin has been buoyed by a surge in demand, reflecting broader trends observed across North America. As urban centers continue to expand, the necessity for well-managed and strategically located rental properties becomes increasingly crucial. This refinancing, facilitated by JLL, highlights the confidence investors have in the long-term sustainability of the multifamily market, particularly in thriving urban settings like Austin. MacKay. While this news focuses on Austin, it offers valuable insights for us here in Canada as well. The resilience of the multifamily sector in Austin can serve as a blueprint for Canadian cities aiming to enhance their housing strategies. With occupancy rates on the rise and financial backing for large-scale projects, there is an opportunity for Canadian investors to learn and adopt similar strategies to address housing demands and expand their portfolios. MacKay. It is encouraging to see such substantial investments being made in the multifamily real estate market, highlighting the continued appeal of this asset class. As we work to tackle our own housing challenges here in Canada, these developments in Austin provide a positive example of what can be achieved with strategic planning and robust financial backing. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, MacKay. See you on the next one.